लाइट लगानी पड़ेगी, अंधेरा अंधेरा। पीछे की बंद कर। हेलो।
Hi, Sharon.
Hello, sir.
Good morning.
Your voice is clear. You have your presentation ready, right?
Yes, yes.
And I'm supposing you already know how we're going to share it. You have it. You have the option to share, right? Can you please check?
No, I think it's saying host disabled, so you'll have to enable sharing.
Okay, give me a minute. Yes, can you please check now?
I think it will later out of the emails.
Yep. Yes. I can see your presentation.
Basically, but it's a little bit different.
Yes, yes, it's visible.
Okay.
Okay. I think so. The setup is done. I'll start the webinar at 11. No need to leave this webinar. I'll just start the session at 11.
Okay.
And then I'll introduce you at 11:05:06. We can start with the webinar. And
Sure.
post that, I'll be asking for if they have any questions, and I'll be reading out to you one by one. And I think you have the bandwidth for a 20-minute Q&A.
Yeah, should be fine.
Yeah.
What I'm planning to do is around 45 minutes of a talk, and thereafter we can have Q&A.
Sure, perfect, perfect. So we'll do that session, and yeah, I think we'll be sorted.
Yeah. So you are the only one from cash flow, or is Aditya or somebody else joining?
I think Aditya won't be joining because he is busy with some internal audit stuff.
Okay.
Yeah, so I'll be the one on
You will
this.
be around. Okay.
Yeah, I'll be there. If you need anything anywhere, so just let me know.
No. Perfect.
Yeah, thank you.
We have a few minutes.
Yes, yes.
Screen
Hello, good morning, everyone. We'll wait for a few more minutes until more people join us for this webinar. Hello, everyone. I have attached a Elevate Finance community link in the chat here. So this community is basically where we share all the GST updates and all the events and webinars that are happening at Cashflow. So you can be posted about everything that's going on. So please feel free to join the community. Thank you. Hello, everyone. Good morning. I would like to welcome you all to today's session. I'd like to introduce our today's speaker, Mr. Sunil Gabawala. Mr. Sunil is a highly accomplished chartered accountant and cost accountant with over 25 years of experience. He has led his firm with a focus on tax law, including VAT, service tax, and GST. He has authored several books, including a renowned treatise on service tax, and actively contributes to GST policy. A sought-after speaker, he has delivered lectures at various industry forums, trained government officers, and written extensively on indirect tax. He is a former president of the Bombay Chartered Accountants Society and currently chairs its indirect tax community. Over to Mr. Sunil.
Thank you, Sharayu, for your nice introduction and this opportunity to speak to these participants. And it's a wonderful Monday morning, and there are lots of changes in GST, and that's where when Team Cashflow had a discussion with us, we said that it's important to for the participants to understand various changes which have been recently introduced. And when I started preparing on the recent changes, honestly, there were so many changes that it would have become difficult to cover all those changes within one session of 45 minutes or 1 hour in that sense. So what I've tried to do is I've tried to pick up 4 major baskets of changes which are having widespread implication, and we will be discussing those 4 changes. There are many more, like there are changes in the reverse charge mechanism and the rate changes and various clarifications which have been issued, but they are very sector specific. So I've tried to avoid all of that, and we'll be doing our discussions on 4 broad baskets, which I think has already been circulated in the preliminary message which has been sent to the participants. So with that background, let me straight away start with the presentation, and post the presentation, we can also have some time for questions. I'm sure there would be many. So please note down your questions, and you can put it in the Q&A box. And as we proceed ahead, we will towards the end take up all those questions as well. So friends, over the last few months, we've seen a barrage of changes in the GST regime. And within this barrage of changes, there are some changes which are, as I said, sector specific, but some which are widespread. And 4 widespread changes which we are going to discuss today pertain to, firstly, the input service distributor, something which has been made mandatory from 1st of April 2025. This is not something new, but because it has been made mandatory from 1st April 2025, it can have widespread implications across multi-locational establishments. And therefore, I think it's time to discuss that aspect in a little bit more detail. Try to understand this creature called input service distributor, considering the fact that there is also a concept called cross charge. So what is the interplay between them? What all would be the transactions which would be a subject matter of input service distributor, and what would be the transactions the subject matter of cross charge? So that is the first basket of changes which we would discuss. And though the change is only in one particular section and a rule, there is a lot of interpretation and a lot of background which has flown through this entire process. So we will be discussing that also in as we move into this part of the discussion. The second change which we are going to talk about is the introduction of section 128A, which basically deals with the amnesty scheme for the past litigations, wherein we have been given a waiver of interest and penalties if the tax is paid before a cutoff date, before a notified date, which again coincides to be 31st of March 2025. So we'll be discussing that in detail. Again, this is a one-time change, but that one-time change is likely to clean up a lot of past litigation, and therefore it might have widespread ramifications. So we thought that we'll discuss that as well. The third change, again being a one-time transitional change, is relating to the concession given for the delayed claim of input tax credit by way of introduction of sections 16.5 and 16.6. And we'll discuss that in a little bit detail, and the consequences for transactions which have already been concluded, and the credits which have been claimed and being disputed. So how are the process of rectification going to take place? So we'll discuss that as the third basket of major changes which we are going to discuss. And finally, we'll talk about the fact that yes, for transactions of financial year 23-24, we are staring at a cutoff date of 30th November. And there are quite a few things which need to be done before that. Some of them, of course, were required to be done in GSTR 1, which the due date for which is already over. But if there is still something which is missed out, you could still file something known as a GSTR 1A, which is a recently introduced proposition. And by doing a GSTR 1A, you could still have a small lease of life for our next few days. So I think in that sense, it's topical. So that's the fourth thing which we are going to discuss. And these are the four major changes which we will be talking about today. So with that background, let's start with the first one, which deals with the input service distributor. And friends, before we really go into the amendment, which basically makes mandatory, it's important to go into a little bit of a background of input service distributor if we have to understand this provision in the correct perspective and its implications. So prior to the introduction of GST, as we are aware, as far as excise was concerned, there was a premise specific registration which was required by manufacturing units. However, as far as service providers were concerned, they were liable to pay service tax. They had a choice of either obtaining a branch specific registration or centralized registration. I'm aware most of the service providers actually obtained centralized registration, but there were some specific organizations like insurance companies, banks, etc., who might have chosen a decentralized registration. Now, when we have a registration mechanism, which is not an entity basis registration, but a premise specific registration, and you have a Senvet credit rule, which gives a credit, which is based on the receipt of goods or services at registered premises, there is a bit of a challenge which comes in. Especially when you look at it from a manufacturer's perspective, the challenge which they were facing was that they had factories in various locations and they had to pay excise at those locations. Now, there were various services, input services, which they used to procure, and where vendors would raise invoices on the centralized office or the corporate office in Bombay or in a city, and the factories might be at a little bit of an interior area. So in that type of a
Sunil, sir,
situation,
sorry
there
to
was
bother you.
yes,
But
yes, please.
there's some disturbance in your voice. Can you, I think, try to turn off your video and then proceed?
You are not able to hear me?
Yeah, there's some disturbance in your voice.
Is this better now?
Hello.
Hello.
Yeah.
Is this better?
Yeah.
Okay. So as I was highlighting that there was a bit of a disconnect wherein various vendors would raise input service invoices on the corporate office and the excise duty was payable at the factories. And that is where to bring a bridge on this aspect, the concept of input service distributor was introduced under the Senvet credit regime. And that ISD registration facilitated the corporate office to obtain a registration and act as a pipeline and transfer the credit or distribute the credit from the corporate office to the branch office. We need to bear in mind that in the fractured regime prior to GST, there was no deeming fiction to treat these different registrations as different entities. And therefore, there was a fracture of the credit which was facilitated through this entire process of input service registration for services. For inputs, it was facilitated through the first stage dealer and the second stage dealer registrations. Now, in this background, we tried to introduce the concept of GST. And when we introduced GST as a panacea for most of the problems of indirect taxes, and we brought in a grand merger of VAT, service tax, excise duty, it came with a lot of concepts from various laws. And a couple of important concepts which were newly introduced was, the first was a need for a state-specific registration, and the deeming fiction which treated that if an entity has registration in two states, the two different registrations will be treated as distinct persons. The law did not stop there. By way of a deeming fiction, Schedule 1 Entry 2 also said that if there is any supply of goods or services or both between these two distinct persons, then that will be treated as a supply and tax will be payable even if there is no monetary consideration. Of course, through a saving grace through a proviso to Rule 28, we were told that if the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value typically the department will not question valuation, because in case of distinct persons, which is basically branches and head office, there can be a lot of subjectivity. There is actually no transactional value or consideration, and therefore there could be a lot of subjectivity on how to define a value on which tax has to be paid. And therefore, through the second proviso, a concession was given that whatever value is plotted on the invoice will be acceptable to us, and we will not question the valuation. Essentially, when this entry was introduced at the time of the draft legislation, a broad thought process and the justification of entry for this taxation of branch transfer was that this will enable a free flow of credit. Otherwise, the procuring state might end up with accumulation of credit, and the manufacturing or the other state from where the service is being provided might have to just keep on paying taxes on the output side. And therefore, to avoid that, it was always understood that this entry for branch transfer taxation was typically meant to overcome that problem of accumulation of credit in one state. So from the old regime, when we are looking at the Senvet law, the first stage and the second stage dealer concepts were not continued, because as it is, trading was also a part of the GST regime. But the input service distributor concept was carried forward into the GST. Ideally, when one looks at the branch transfer entry, one felt that perhaps this concept may not have been required, but be as it may, the concept was actually continued into the GST regime. And when it was continued in the GST regime, there was a question of whether the two concepts of ISD and cross charge, because both of them apparently try to achieve a common objective, whether they are optional, or if they are both of them are mandatory, then how do you decide what falls under ISD and what falls under cross charge? And I think this was an issue when the GST law was introduced. There was a clarification and FAQ saying that ISD is optional. You can do either ISD or cross charge. And of course, whatever you do will be acceptable to us. And this, of course, was coming through various FAQs. And while all of this was happening, this issue was also taken up as an agenda in June 2019. And in the agenda, there was a draft circular recommended by the law committee, trying to say that, look, both these concepts are not the same. There is a difference between these two concepts, and in some certain cases you have to do ISD, in certain cases you have to do cross charge. So while the law committee did recommend a type of a circular or a draft circular for the consideration of the council, the GST council did not accept the circular. In fact, they specifically rejected it, saying that this will unnecessarily lead to unnecessary complications and difficulty for no benefit for the revenue or for the taxpayer in any manner. So therefore, the entire concept of this differentiation between ISD and cross charge was kept in the cold storage. While all of this was happening, the field formations were having different interpretations. They were not ready to accept the FAQs. In the meantime, certain SSEs took up the matter to the advanced ruling authorities, and the advanced ruling authorities also gave conflicting opinions on this. And therefore, this entire thing resulted in a lot of ground level pain. Based on industry representation, again, the issue was taken up in the July 23 council meeting. And in that GST council meeting in July 23, the council reclarified in a proper circular that ISD is optional. However, the council also said that while we are right now making it optional, we will make it mandatory in the near future. We will make necessary amendments in the law to make it mandatory. They also talked about cross charge. They said that cross charge may be required, but so long as the recipient is eligible for full input tax credit, then the value which has been identified will be acceptable. And if no value is identified, even nil will be acceptable. In fact, they also went ahead and said that the employee cost will not be a part of the valuation for the purposes of cross charge. So in that sense, a lot of relief was granted in July 2023 through this entire process, wherein we were told that, okay, so long as the full input tax credit is available, cross charge also nil value will be acceptable. And as it is, ISD was optional. So many organizations who had really not implemented either cross charge or ISD were safeguarded because of this council meeting and the circulars which were issued pursuant to that council meeting. But as it's been told about in this council meeting itself, they had made it very clear that we will make ISD mandatory in the near future. And that's where the next budget saw the proposals to make amendments to the CGST Act and the rules. And those proposals have been made effective, and they would be effective from 1st of April 2025. So with this background, we now therefore need to understand that yes, moving forward up to 1st April 2025, we are in a safe zone. Whether you have implemented ISD or not implemented it, there is no problem. Even if you have not implemented it, all the circulars, FAQs will be of your help. But from 1st of April 2025, if your organization is a multi-locational establishment having multiple GSTNs, then input service distributor registration becomes mandatory from 1st of April 2025. So in that background, we go into the concept of input service distributor and what is the major amendment which has been carried out. So the definition of input service distributor itself has been amended. You can see in this, we have tried to compare the definition of input service distributor which existed under the SENVET rules, which existed under the GST Act prior to the amendment effective from 1st of April 25, and the proposed amendment which will be effective from 1st of April 2025. And if you compare these three definitions, you will find that there are two major changes which are coming in the new definition which has been proposed from 1st of April 2025. The first amendment is, the first major change is in the underlined section below, wherein we are told that input service distributor means an office which is liable to distribute the input tax credit. So therefore, through the definition of the ISD, a mandate has been created. It has been made mandatory that an office which receives invoices will be required to distribute the input tax credit. It cannot itself claim the ITC. It will have to distribute it to the recipient units, and the recipient units will claim the credits in this regard. So that is a first change, which of course has been talked about a lot. But there's a small subtle change, which again makes a big difference in the understanding of the concept of input service distributor, is the portion in the red font, if you can see on the screen, which says that input service distributor means an office which receives tax invoices for or on behalf of distinct persons. So here, for the first time in the concept of input service distributor, we are bringing the concept of agency, wherein one office is acting for or on behalf of the branches or other distinct persons, and which was not there. If you compare the earlier definitions, this concept of for or on behalf of distinct persons was not present in the earlier regime as far as input service distributor definition was concerned. This will be very important when we try to understand the scoping of the entire input service distributor and its interplay with the cross charge. Just to summarize, when we look at the SENVET credit provisions, ISD was optional, and a corporate office can distribute credits of input services received by either the branches or by the head office itself. And the same provisions was there in the GST up to 31st of March 2025. Coming 1st April 2025, while ISD is made mandatory, it will have, it is now restricted only to situations where input services or invoices are received by the input services are received by the branches, but invoices are received by the head office on behalf of the branches. The distinction between a service received by a branch and a common service received by a head office becomes very apparent. And that is where I think is the key difference between an input service distributor concept and a cross-charge concept. If a service is received by the head office, it might be for a common benefit of the branches, but that will not become a subject matter of ISD. Let me give you an example. If the corporate office has a premises which is taken on rent, it obtains a service of renting. Now, this renting service obtained for the corporate office will be resulting in a benefit of the branches. But the service is received by the head office, and therefore, such service of the landlord of providing a renting service cannot become a part of ISD. It will become a part of cross-charge. It might be an internally generated service by way of a support service given by the head office to the branches. And that is where I think the distinction between an ISD and a cross-charge will come into place. So therefore, if we have to understand this entire facet, we will look at service will typically have three different baskets to it. First is the office which will enter into a contract and receive invoices from the vendors. Now that can be the same as the office which actually receives the service and where the actual services are provided by the vendor, or it can be different. And therefore, these are different concepts. The provision of service can be at one location and the invoice can be at another location. And this aspect of provision and receipt of service needs to be distinguished from the concept of derivation of a benefit from the service being received. And the broad proposition which we are trying to make is, if your contracting and invoicing is not at the same location where there is an actual provision and receipt of service, there's a discongruence between these two, then you will have to go by the input service distributor concept. But if the provision and receipt of service is at one location and the benefit is derived at another location, then it will go through the cross-charge concept. Having said this, we need to understand that there's a very thin line of difference. And therefore, from this theory, we can now go to some practical examples. And for understanding those practical examples, let us first go back to the draft circular. The draft circular proposed by the law committee, which never saw the light of the day, but it had a very elaborate example trying to distinguish between the ISD and the cross-charge. And the example which has been taken in that circular deals with a head office, basically a software company, having a head office and two branch offices, BO1 and BO2. And there are various, this flow chart, if you can see, there are various situations which have been examined in it. So the IS1, there are wherein security, a contract is entered the head office with the agency saying that, look, you will give question wouldn't have arisen. But if there, because of various reasons, the head office chooses to act as a centralized procurement and a processing unit, it says that for all these services received by the branches, please send me the invoice only at the head office, and it processes that invoice. Then we are told that that invoice will become a part of input service distributor because the security services are provided and received at the respective branches, even though the invoice is received by the head office. Now, compare that with another situation wherein they are talking about a common admin or an HR team at the head office, which helps all the branches in procuring people, handling various administrative tasks, or handling the technical maintenance activities, etc. So for that purpose, the draft circular says that these are examples of internally generated services. This is the word used in the draft circular. They are saying that the head office, being a distinct person, generates a service by way of a business support service for the different branches. And this will become a part of the cross-charge. Same way, if there are inter-se services between branches, let's say BO1 does some partial software development for BO2, then that also naturally is clearly an identified discernible service, and that is also subject to matter of a cross-charge. So this was the draft circular. Of course, for the recent ISD amendment, there is no circular being issued, but looking at the amendment in the definition and looking at the logic expressed in this draft circular, I think the entire thought process aligns. And I would like to consider this draft circular and the interpretation of this draft circular as the basis for conceptual understanding and applicability of ISD. Now, with that background in this slide, let us now look at some live examples. The first one was the one which was already given in the draft circular, where there was a situation of security services which were centrally procured by the head office for all the branches. Mind you, the actual provision of the security service happens at the branch and the receipt of the security service happens at the branch. The circular said it should be ISD, and necessarily if you have examples like this, moving forward, it will become a part of ISD. Same way, you have a factory, let us say in Silvassa, but you are, for the factory, you are importing raw materials. And that raw materials, when you import, you need to appoint a clearing forwarding agent or a custom house agent. You might also need to appoint a transporter who will move the raw materials from the port up to the factory location. Now, typically, many of the examples, this GTA, CHA, clearing forwarding services are billed to the factory. But if the head office chooses to centrally procure these services and process these services, and these GTA, CHA courier guys are billing to the head office for a service which is directly received by the branch, again, this will become a part of the input service distributor. Now, as compared to that, the example which we first took was an example of a corporate office taken on rent. Naturally, this office will be used not only by the HO, but by the branch people also, and it will definitely result in an indirect benefit to the branches. So therefore, this is not a subject matter of ISD. This would be a subject matter of cross charge. Now, these I think are simplistic examples. The complication comes in the next example, which deals with an example of a centralized tax team. So this corporate office, which was taken on rent, we say that the rent of the leasing services obtained from the landlord are used by the head office to provide a administrative or a business support to the branches. Now, naturally, this office will have employees who would be handling the centralized tax process. So let's say they have a tax team who's sitting there. Now, again, the circular also says that this is a service given by the employees to the branches. Of course, through a clarification, we are told that the salary cost need not become a part of the valuation for the purposes of cross charge. But the concept is very clearly brought about to say that the corporate tax team sitting at the head office provides an internally generated services of tax compliance or business support service to the branches. Now, let me extend, having understood this, let me extend this example slightly. Let us say this tax team also procures one software and installs it on its laptop there so that that software can enable all the returns filing and the compliances for all the branches. Whether the cost of the software, the third-party agency fees of the software subscription, whether that will be a subject matter of cross-charge or an ISD is a debate which is being hotly debated across various forums. And to my mind, just like the rent paid for the corporate office or the services given by the employee of the corporate office are subject matter of internally generated service and not a subject of a service procured on behalf of the branches, I would believe even this software would be procured by the tax team for themselves, for their own consumption, and for helping the branches to file their returns. And naturally, that is a business support service, and that would be a subject matter of cross charge. This would not become a subject matter of ISD. Similarly, instead of a software, if the centralized tax team obtains the services of a third-party outsourced consultant, even that would be a subject matter of cross charge and not a subject matter of ISD. So I think this is where the scope of ISD, though made mandatory, is reduced drastically because of this concept of the agency principle, the requirement that the head office should receive a service for or on behalf of the branches rather than merely pass on some benefit to the branches. Having said that, a couple of examples where there could also be an ISD implication would be an example of an insurance. Now, typically, when you look at an insurance, a security, these types of examples, these are services which are actually received locally. A group mediclaim policy taken by the organization, the actual receipt of the insurance service is by the employees and their family members scattered across various states. It's only that for the economies of scale, you have a single policy and a single proposal at the head office level. Therefore, these types of consolidated insurance policies for various employees located across the country would be a subject matter wherein one would say that the head office is procuring this insurance for or on behalf of the branches, and therefore this should be a subject matter of ISD. Same way, you might have asset insurance. Assets might be located across the country, but there's a single insurance policy. Again, that would be a subject matter of input service distributor. Same way, if there are laptops and devices across the country and a consolidated license is obtained by the head office. Let's say 500 licenses are obtained for 500 different laptops across spread across 10 locations. In that case, again, the service is received and provided at the respective laptops at the respective locations, and therefore this also would be fitting within that agency principle and will become a subject matter of ISD. Now, contradistinguish this with the last example wherein we are talking about a statutory or an internal audit service obtained by the head office. The service in this example, in my view, is not obtained by the head office for or on behalf of the distinct persons. It is obtained by the head office for itself. Necessarily, some benefit of these services will flow to the branches. So, therefore, this will not become a subject matter of ISD, but a subject matter of cross charge. So this is how one will actually have to go through the different expenditures and the procurements that an organization has, and then accordingly decide which all would be a subject matter of ISD and which all would be a subject matter of cross charge. Having understood the broad distinction between the concepts of ISD and cross charge, we now go to the statutory provisions. And as was mentioned in the definition clause, same way there is a very express clause under section 20 also, which obliges the office to register itself as the head office to register itself as ISD and distribute the credit. Sections 22 and 3 basically enable the provision of distribution. It says that the credit has to be distributed subject to various restrictions which are mentioned in the rule. And for the said purpose, a secondary document called an ISD invoice will be generated by the ISD and issued to the recipient. Now, in case of any errors or aberrations, section 21 says that the excess distribution shall be recovered from the branches. Now, this is important. Even though the invoice is received by the head office and it is distributed by the head office to the branches, any excess distribution by the head office will entail a show cause and a recovery from the branches run and not from the head office. And this actually complicates the entire ISD propositions, because the actual conduct of the documentation and the activity was by the head office, and the accountability and the responsibility of demonstrating and defending that entire distribution is of the branches. And many a times the same invoice might be distributed to 3-4 different branches in a proportion if it's a common invoice or a common procurement, and therefore there can be multiplicity of proceedings also. So section 21 actually complicates and the situation slightly and makes the entire aspect a subject matter of unnecessary litigation. Now, how do we distribute it? For that, we have Rule 39, and we are told that whatever is the ITC available for a month. So, in a normal registration, you generally get ITC in your GSTR 2B. Here, a similar document is GSTR 6A. So, once an ISD obtains a registration, vendors raise invoice in the name of that registration and upload it in their GSTR 1. The ITC reflects in the GSTR 6A of the ISD. And what the ISD is required to do is on the 11th, the 6A gets generated 11th midnight. So on 12th, you will download the 6A, and whatever is ITC available in that 6A, you will raise an internal invoice or an ISD invoice and distribute the same in the same month. Between 12th and 13th, you have to decide on the invoicing, ISD invoicing and the distribution. And this return has to be filed by 13th in the format called GSTR 6. Once this GSTR 6 is filed, it will appear, the ISD invoice will appear in the GSTR 2B of the branches in the same month. And on the 14th, when the GSTR 2B is downloaded by the branches, the ISD invoice will get reflected and the credit will be claimed there. Of course, how are you going to distribute? So here, there's a 3-tier system which has been brought in. The invoice, the services have been received by one branch, and it's attributable only to one branch, then naturally you will send it to distribute the credit only to that branch. It could be to a cluster of branches. For example, you might procure a service which is to be received, a service for, let us say, 4 or 5 branches in West India. Then if it's to a cluster of such branches, then it will be distributed in the basis of the turnover of the cluster of the branches. And if it is a common type of an activity for all the branches, then it will be distributed across all the branches in the basis of the turnover. This turnover will be based on the previous year. And if there was no previous year, in that case, in the basis of the previous quarter. The next point is important. It is important for you to not only distribute eligible ITC, but also ineligible credits. So therefore, a group mediclaim, the example which we took earlier, was actually a blocked credit. Despite being a blocked credit, the head office will have to head office ISD will have to take it in the ISD registration and distribute it through ISD invoices, and each of the branches will then treat it as a blocked credit. The integrated tax will be distributed as integrated tax, whereas the CGST and the SGST will get distributed either as CGST, SGST, or as integrated tax, depending on the address of the branch. If the ISD is in Maharashtra and the branch is in Gujarat, then it will get distributed as integrated tax. As I was highlighting, there will be a need for issue of an ISD invoice for this purpose. If there are any errors in the ISD invoice in a subsequent month, you can issue ISD debit notes, credit notes. Similarly, if a supplier issues a debit note or a credit note, then that's a debit note, credit note of the supplier also will have to be distributed in the similar manner. So these are the provisions for ISD, which we need to take care of when we are going to look at this entire concept of ISD and implement it. And therefore, what are the next steps which one will have to look at? I think the first step will be to identify situations where there is a need for an ISD distribution. Consider whether those ISD cases can be decentralized. If you are able to decentralize, at least some of the procedural pain can be reduced. Obtain the necessary ISD registration and then implement all these compliances. As you do this implementation, please note that your original cross-charge policy might need a revisit. Otherwise, you will end up with substantial accumulation at the branches, because if there's a duplication of ISD and cross-charge, then necessarily more credits will flow to the branches, and therefore there might be accumulation at the branches. So therefore, a holistic approach might be required. And now we have a few months for doing this. From 1st of April 25, this becomes compulsory. So I think with that much of a discussion, I think I've spent quite a lot of time in explaining this ISD cross-charge. We straight away go to the second major basket of changes, which is relating to the amnesty scheme. This is essentially a beneficial scheme. Section 128A has been introduced, which provides for a sort of an amnesty. It says that this amnesty or a waiver of interest or penalty is applicable in certain situations where a notice or an order has been issued. We'll talk about it in the next slide. Of course, there is a specific time period for which this has been issued. So for a period, the tax demands pertaining to periods from financial year 17-18, 18-19, and 19-20. Only for the first 3 years of GST implementation, this amnesty scheme of waiver is available. And what is the scheme? We are told that if you pay the full tax before the notified date, which is now notified to be 31st March 2025, then no interest or penalty shall be payable, and the notices or the orders which have been issued will be concluded and the proceedings will be deemed to be concluded. Having said that, the government has safeguarded itself. It has said that if you already paid some tax, interest or penalty, nothing will be refunded. So whatever has been paid is already over. If there is something payable for that, the tax will be paid. Whatever is the pending tax, you pay that, and the balance interest and penalty will get waived off or reduced. Now, that's where we are. If the matter is pending in appeal, there is a provision which says that the appeals, if they are pending, will have to be withdrawn before you can apply for the amnesty. And once you have withdrawn the appeal, thereafter, and you have applied for the amnesty, no further appeal will be possible once all these proceedings are closed. One caveat is that if you have received a refund, you have applied for a refund and received a refund, and thereafter a notice is issued alleging that the refund was erroneously granted to you, then for the notice for recovery of erroneous refund, the provisions of amnesty will not apply. It will be applicable only for the notices for non-payment of short payment of taxes. Now, the specific situations which are covered are governed by the various sub-clauses of 128A subsection 1. So it deals with 3 different situations. The first situation is, it talks about a situation where a notice, or basically a show cause notice, is issued, but the matter is pending. Therefore, no order has been passed. So it's at a show cause stage. So here we are told that yes, you can apply for the amnesty. Of course, only if the notice is issued under section 73. We are aware that under the old adjudication provisions, there were two provisions. One is 73 and 74. 73 deals with cases where there is no fraud, suppression, etc. alleged. 74 deals with situations where the tax officer alleges that there was a fraud or a suppression or a willful misstatement with an intent to evade tax. The amnesty scheme covers only provision notices which are issued under section 73. It does not cover the situation of notices issued under section 74. And that's why they have used the word notice under section 73(1). In those situations, we are told that if the matter is pending at the SCN stage, you will apply for amnesty in SPL1. And before making that application, you will have to pay the tax by 31st March 25. The tax has to be paid by DRC3. And once the tax is paid and the application is made, the application has to be filed by 30th June. And then there's a process post application, which will have a common slide thereafter, wherein we'll talk about that common process. Similarly, if a notice is issued and an order is also passed, but no order has been passed under the appellate authorities. So the first order has been passed, same provisions, but here the form changes to SPL 02. And the mode of payment changes to credit to electronic liability ledger. And if required, you'll do an adjustment through DRC 3A. So this is a very detailed procedure which has been prescribed through the rules and through the circulars. And one will have to follow that process of making the payment so that the liability which is already created on the portal gets exhausted. Again, the timelines are similar for these cases where order is passed, but appellate order has not been passed. The third situation is where the first appellate order has been passed, but the second order has not been passed. And this would typically cover all situations because as of today, the GST tribunal itself is not set up. Therefore, there is no situation of an order under the GST appellate tribunal. Again, the procedure is similar. You have an outer timeline of 31st March 25 for making a payment. And that payment will be made either by way of a credit to electronic liability ledger or through an adjustment through DRC 3A. Again, application for amnesty to be filed in SPL2 and the application deadline would be 30th of June 2025. So these are the three situations, the generic type of situations. Now, through the first proviso, a very interesting situation has been examined. They've said that, look, if the notice was initially issued under section 74, alleging a fraud, therefore you were not eligible. But when the adjudicating authority or the appellate authority later on holds that, well, the tax is payable on merits, but the fraud situation does not exist, in that case, the first proviso says that you will be eligible for the benefit. Now, naturally, this order might be passed much later than the entire 31st March date expires. And therefore, the due date of payment is mentioned to be 6 months from the date of the appellate order holding that you are eligible, you are governed by 73 rather than 74. And at that point of time, you will decide whether you will have to file SPL 1 or 2, depending on the forum at which this takes place. Again, here, the due date of payment and the date of application is the same. So you'll have to be slightly careful and vigilant. This is the same 6-month time frame has been given both for the due date as well as for making the application. Now, the second situation proviso deals with a situation where the order is partially in your favor, partially against you, and the department files an appeal. And you have also filed an appeal. You have filed an appeal for the against part. Department has filed an appeal against you for the favorable part. In this case, your appeal you can withdraw and apply for the amnesty, subject to a condition that, look, the department appeal will continue. And if ultimately the department wins and an additional amount is defined to be payable, then within 3 months from the date of the order, that amount will be paid. So this is again a contingent type of a situation which has been examined under the amnesty scheme. Now, in this background, through a circular, a few clarifications have been given because the eligibility itself is restrictive and there could be situations of a combination happening, especially considering the fact that today we have show causes which might deal with multiple issues. And therefore, if there is a show cause which deals with recovery of erroneous refund which is not eligible and also other matters, in that case, through the rule, we are told that yes, you can apply for amnesty, but the waiver of interest and penalty will be applicable only for other matters, not for erroneous refund recovery. So, as far as the procedure is concerned, we are told you pay all the tax defined for the notice. at the first juncture. Apply for amnesty. When you apply for amnesty, the officer will, through an order, mention that, look, this much interest and penalty is waived, balance interest and penalty is determined, and then you pay that balance interest and penalty later. Similarly, in case the period is partially covered, we are aware that 1718, 1819, and 1920 is the only period governed by amnesty. Now you might have a common notice for 1920 and 2021. So if the period is partially covered, similar provisions are told. You pay the full tax, you apply for amnesty, and then for 1920, the officer will give the waiver. 2021, he will confirm the interest and penalty, and then you can pay that interest and penalty at that time. Now, third situation is a combination of a situation of this amnesty and the second amnesty, which we are going to talk about in the next basket, which deals with the delayed claim of ITC, which has been retrospectively revalidated under section 16.5 and 16.6. In this case, we are told that when you are calculating the tax, you only calculate the balance tax. Reduce the amount of demand which is confirmed or proposed on account of delayed filing of ITC claims. So after you reduce that, whatever is the balance amount, pay only that much, and that will conclude the procedure. So that is the combo deals. A long drawn procedure for claiming amnesty benefit, right from the stage that you have to determine your eligibility and accordingly pay tax and withdraw appeal and file the application. Again, an elaborate procedure from the officer's side. He may issue you a notice for rejection. If he wants to do that, he'll have to issue it within 3 months. You'll get 1 month time to reply to it, and then there will be an order for confirmation of the application or an order for rejection. Depending on the situation, if there's an order of rejection, you can file an appeal, and then based on a favorable outcome of the appeal, you will be eligible for the process. However, if even the appellate procedure, the outcome is unfavorable, then the original appeal gets restored. So essentially, there will be two parallel tracks. One track dealing with the original merit, where you are filed an appeal and you have withdrawn it to get into the amnesty track. And in the amnesty track, again, if there's a litigation and that litigation comes unfavorable, then you are sent back to the original track, and therefore there is no prejudice against you in that sense. So these are the broad processes. A few FAQs are being summarized in the last slide of this discussion. So a very happy case is your tax interest and penalty proposed in SCL. And as I'm looking at this table, we need to bear in mind that this entire table applies for notices issued under section 73. You are required to just, it's a simple case, you pay the tax, full waiver of interest and penalty will be available. In case tax interest and penalty is confirmed in OIO and appeal is pending, naturally, at the time of filing appeal, you made a partial pre-deposit. You might have paid 10% or 20% as the case may be. In this situation, you are told you will have to pay the balance tax. The 10-20% will get adjusted. Balance tax you pay, and there will be a full waiver of interest and penalty. The third situation is the tax interest and penalty is proposed in the show cause, but here you had already paid the tax before the issuance of the show cause, and therefore the order appropriates the tax already paid, and only penalty is pending, and interest and penalty might be pending, or only penalty might be pending, and the show cause is pending adjudication. In that case, we are told that yes, even though the tax was fully paid up before the announcement of the amnesty scheme, you will be eligible for the amnesty, no additional tax to be paid, and you will get a full waiver of interest and penalty. Similarly, in case the show cause is only proposing interest and penalty, then also the waiver would be available, or the entire interest and penalty will get waived, and no additional tax is payable. But the FAQ here gives a little bit of a contradictory clarification, and it says that if the interest is on account of delayed filing of returns, it will not get waived because the interest was determined on a self-assessed basis. One may debate whether this is a correct interpretation, but yes, the FAQ does highlight this as a caveat that in case it's an interest on delayed filing, the benefit will not be available. The FAQ also summarizes, and correctly so, that you cannot enjoy a partial waiver of tax. You might not say that, okay, I want to pay for, if there's a notice for 3 periods, I want to pay, claim benefit only for 1 period and balance 2, I want to litigate. Or if there are 3 issues in a show cause, I want to fight for 1, and for balance 2, I want to take amnesty. So they are saying pick and choose approach is not allowed. Either the entire notice will be under amnesty or nothing will be under amnesty. And finally, we are told that if there is a delayed filing of returns and there are late fees or some redemption fines, they are not covered, but interest and penalties of all type are covered by the amnesty scheme. So that takes care of the amnesty. Now, a few minutes on the third basket, a sort of a mini amnesty, a one-time transition benefit given for the delayed ITC claim. And we are all aware of the legal provisions provided under Section 16(4), which originally said that you can claim input tax credit only up to the due date of filing the return for September. And thereafter, there was an amendment which said that the credit can be claimed up to the 30th November, any return to be filed by the 30th November of the next financial year. The controversy typically was that in the initial periods, there were taxpayers who were not having a visibility of the credit, and therefore there was a delay in credit beyond this date. And the taxpayers used to argue that ITC is my vested right, and I have already accounted it in my books, but not filed the return, or I filed the return late. Therefore, the provisions should not be applicable. Matters went into courts, but more or less the courts were against. And in that background, the budget proposed a retrospective amendment and tried to give a relief. And it said that for financial year 17-18 up to 2021, the due date will be deemed to be 30th of November 21. Now, naturally, this becomes a retrospective type of an amendment. Similarly, in case of RC cancellation situations, also a time period of 30 days was given. And we were told that while we are giving this relief, as a caveat, standard caveat, they said that if somebody had already faced litigation and had already paid a tax, then no refund of tax already paid or ITC already reversed will be given back to you. So this was the provisions which one needs to bear in mind. Similarly, for RCM cases, there was a circular through which a clarification was given that it's not the period when the service was received, but the date when you are issuing a self-tax invoice in case of unregistered suppliers, which will be the relevant date. So therefore, this clarity also came in much later. Now, because of these reasons, various cases where a demand has been created or a notice has been issued, and what happens to those situations, one will have to deal with. So there can be various situations. One is, of course, you had claimed delayed credit. You have a fear in your mind that at some point show cause will be issued, but as of today, no show cause has been issued. And then the clarification says that if no show cause has been issued, then naturally the officer today will have a wisdom that, okay, let it be a 1920 transaction and let it be delayed then at that point of time. But because of retrospective amendment, there is no delay. And therefore, taking cognizance of the retrospective amendment, the officer will not issue a show cause notice to that extent. Same way, if the matter is pending at the adjudicating authority, show cause is issued, but no order has been issued, then again we are told that the adjudicating authority will not confirm the demand, it will drop the demand. Same way, if order is issued and you are in appeal is pending, appellate authority will drop the demand and issue the order in appeal in that manner. The problem happens when the matter has not been adjudicated, appealed. So an order in original is issued or an order in appeal is issued and it has not been further appealed. In that case, we are told that you can apply for rectification within 6 months, and a very elaborate procedure for that type of a rectification has been provided for. So one will have to go through that procedure and seek the rectification, but this is a genuine relief which entities can claim if there has been an unpaid tax. Of course, if the tax has been paid, the provisions are very clear that no refunds will be available to you. And the last couple of minutes we will spend on the provisions relating to the corrective actions to be taken for financial year 23-24. The earlier provision which we talked about clearly highlighted that ITC for financial year 23-24 will have to be claimed in a GST or 3B to be filed before 30th November. We are aware that the October 3B the due date is 20th of November. But sometimes organizations might delay the 3B so that if there is any credits to be missed out, they can claim it. So that is, of course, that's not an advisable situation. Ideally, one will, though the law says 30th November, because the due date for October 3B is 20th November, most organizations will have to look at the deadline of 20th November and check whether any ITC pertaining to financial year 23-24 has not been claimed till that date. Similarly, we are aware that the credit is available provisionally subject to the vendor ultimately making a payment of tax. And therefore, since the last year, we have a rule 37A, which requires you to revisit all the credits which you have claimed. And if any credit you have claimed, but the vendor has not paid the tax, you are required to reverse the credit along with interest, and that credit can be claimed back when the payment is made by the vendor. So that again, the due date is 30th November. As far as the output side is concerned, you have the concepts of B2B and B2C amendments. And again, these amendments and credit notes are permitted to be done in GSTR1 to be filed before 30th November. We are aware that the GSTR1 for the October cycle was already due and must have been filed by 11th of the month. And if it is filed, recently we have introduced a GSTR1A, and which permits, if there are any errors or omissions in GSTR1, you can file a GSTR1A between GSTR1 and 3B, and you can make those amendments. So you might have a 2-3 days window pending right now before you file a GSTR 3B to find out if there are any output tax related changes required. And if so, do the GSTR 1A before you really file the GSTR 3B. So that's where this again becomes important as of now. It's just the last slide where we'll talk about other periodic actions which are due in the near future. One is, of course, the true up of the reversal ratio. We are aware that for financial year 23-24, you might have provisionally reversed ITC under Rule 42, and the final reversal was to be done on 1st of April. And if not done, you have to do it by now. And if there was an excess reversal, the recredit has to be claimed latest by the 30th November. Simultaneous to all of this, there is also a lot of action happening in ensuring correct compliance and correct reporting of the input tax credits. And therefore, we have the portal has enabled the reporting of the opening balance of temporary reversals and RCM ITC not claimed. So you have to identify that. And based on that, the portal will keep track of your correct claim of input tax credit. We've done, along with cash flow, we've done a detailed session on invoice management system implementation. One may want to relook at that IMS. It's still getting implemented. There are teething troubles. The first cycle is ongoing, and organizations have faced teething troubles on this front. But yes, that's the way to move ahead. Maybe there will be a couple of months of teething problems. Just a generic reminder, lots of notices are becoming time barred. And therefore are being issued on the last day or the last few days. Most of the times these notices appear on the portal, and if you miss the responding to those notices, there can be ex parte assessments. Therefore, regular checking of notices and orders on the portal becomes relevant. And finally, we have the annual return filing cycle for the financial year 23-24, which is due on 31st of December. So therefore, a fairly hectic activity prone few months for as far as GST is concerned. Not to talk about for many changes which have also been introduced in the legislation and through circulars, and therefore that's for some another day. But today, I think I am already overshot a lot of my time frame, and that's where I'd like to stop. But of course, because the content was large, I had to rush slightly. I hope the 4 facets which have been discussed have been understood by the participants. We can now take up questions if there are any. Over to you, Sharai.
Yes, thank you. Thank you so much, Sunil sir. Yes, everyone, we are open to questions now. So if you have any questions related to today's topic that Sunil sir covered, please feel free to send them in the Q&A section, and we'll take those one by one. Also, I see some have mentioned in the chat that they need some info related to IMS. So Sunil sir lastly hosted a webinar on IMS. You can head to our YouTube channel or our website. You'll have the webinar recording there, and you can check that. So we have one question from Deepak. He's asking, we have paid the full tax and also filed an appeal. Can we get any relief?
Yes, you can apply for amnesty if you want to. And once you apply for the amnesty, the tax which you have already paid will be adjusted, and no interest or penalty will be payable. Only thing which you need to bear in mind is that if you apply for amnesty, the matter gets foreclosed and you will not get a refund of the tax in any situation. So depending on the merits of the case, you may want to litigate if you are hopeful of getting a refund. Otherwise, you may, if you are not very hopeful, or if it's a 50-50 type of a situation, You can apply for amnesty, the tax will get adjusted, and interest and penalty will be waived off.
Okay, so next question is from Himangi. She's asking to explain the concept of ISD, just for a brief explanation.
I think I spent quite a lot of time on concept of ISD. So I'm sorry, it may be difficult to explain it in a few minutes. Sharayu, this
Yes, you can.
recording would be available, na?
Yeah, Himangi, you can always check out the recording. We'll be sharing a follow-up email that will have the presentation and the webinar recording link, so you can understand from that too. Next question is from Deepak. If any outward tax invoice already reported in GSTR1 and now to cancel the output liability by amending in GSTR1, how to report such tax invoice in GSTR1A, whether making taxable value and tax as zero or by any other way?
So ideally, in this type of a situation, you might issue either a credit note for the same value, or you can amend it. I don't think the portal permits amendment to zero, so you might need to do it to 1. And that will be done through GSTR 1A. Either of those two things you can do.
We have another one from Deepika. Can we claim ITC 2324 in October 24 return?
Yes, the return to be filed on the 30 before 20th November. You can definitely claim the ITC for 23-24.
Next question is from Gokul. Can we file a credit note for the FY 23-24 now, or shall we change in GSTR 3B October 2024 return as the 30th November is the due date?
Yes, so this is a very important and a touchy point. You can claim the credit note adjustment in the by 30th November, but the credit note adjustment has to be reflected both in GSTR1 as well as GSTR 3B. Doing a change only in GSTR 3B unilaterally will not be helpful, and it will lead to litigation. So you have to show it in GSTR1, which was you might have already filed on 11th of November, and now you will not be able to file another GSTR1 before 30th November. Therefore, what you need to do is you need to take the benefit of GSTR1A, which has been recently introduced, and amend the GSTR1 of October, which you already filed on 11th November, and reflect the credit note in GSTR1A. If you don't do that, then you will face a problem and you will not be able to adjust it. And therefore, it is very critical that you do it in the right manner in the current month. I hope I'm clear. If there's a doubt, please ask a follow-up question.
Next question is from Narendra. Shall we take ITC on machinery foundation civil work under section 17 subsection 5D?
So this will depend on how you want to interpret the provisions as interpreted by the Supreme Court in Safari retreats. It's open and different type of situations, open judgment. Various people are interpreting it in a different manner. Also, there is a risk of retrospective amendment. And therefore, considering all of that, if you still believe that you want to take a chance and claim the credit, then naturally your last period for financial year 23-24 will be the GSTR 3B, which you will be filing on 20th of November.
Next question is from Rupali. If supplier shows last year invoices in October 24 return, and he's quarterly filer or GSTR of GSTR 3B, can we avail ITC on their invoices?
Yes, you would be able to avail because it would flow into your IMS. I am aware that there is some technical challenge on this front, and some advisories are also being floating around on this front from the GSTN portal. But I would personally believe conceptually you should be able to claim the credit.
So next question is from Rupali. If we want to remove ITC of FY 22-23 from portal reversal ledger, what should we do?
Can you repeat it? It was not very clear.
Yeah, sure. If we want to remove ITC of FY 22-23 from portal reversal ledger, what do we have to do?
So either you can amend the opening balance, or you can take it into a recredit and then a permanent reversal. Either of those two things you can do.
If you have any more questions related to today's webinar, please do let us. Yeah, I think we have covered all the questions that we have.
Sure. Thank you. It was a pleasure speaking.
Yes, and we'll be sharing the webinar recording and the presentation. So you can take a look there. And also, if you want to know more about IMS, please see our previous recording that is available on the website and the Cashflow YouTube channel. Also, to be posted about our webinars, events, please do join our community link. I have the community link in our chat box, so you can join it from there. Yes, thank you so much. Thank you so much for joining. And thank you, Sunil sir, for hosting such a wonderful session. It was very insightful. And we have so many questions still. But yes, maybe we'll do another session with him and then we can address all your questions. So thank you everyone for attending the session. Thank you so much, Sunil sir.
Thank you. It's a pleasure.
Consent.